Good morning, everyone, and welcome to the morning market review live stream. Today is Monday. It is the 18th of March. My name is Russell Shaw. I'm a senior market specialist at FXCM. Just before we get into the meat of the live stream, just going to go ahead and bring up our disclaimers, and I'm going to start off with the high risk investment warning. I'll keep this on screen for a few moments for you. I'll just keep this on screen for another 5 seconds or so. Okay, and here's our market commentaries disclaimer. Again, just going to keep this on screen for a few moments. Hey Kim, good morning to you and welcome. Hope you had a good weekend. All right, let's go ahead, bring up the, hey Raj, good morning to you and welcome. Just going to go ahead, bring up our real rate. Okay, and hey Anna, good morning to you. All right, so we've got this big movement up here in the real rate. And then what we also did was we put in this higher trough. And so there is some strength that has seeped into the real rate. How do we know that? Because of this higher trough. We don't have the uptrend just yet, but the fact that we've got this higher trough here, as opposed to, say, a lower trough, is telling you that the real rate remains supported. And I think that's going to cause us, hey Mia, good morning to you. I think the fact that the real rate is supported has got to be of a concern to us. This Wednesday, we're going to see the FOMC meeting for March. At the beginning of the year, we were anticipating that the rate cuts would start from the March meeting. That, of course, is not going to happen. It's been pushed back to May, and then actually from May, it's been pushed back to June. So the fact of the matter is that the rate cuts are getting pushed further back. We've discussed this, but what is now worrying, at least to me, is that the June rate cut, I think, is in danger. In other words, we may even be pushed back beyond June, perhaps to July. The market at the moment has only got about a 58% probability of a rate cut in June. That's much lower than it has been in the past. And the reason for this is that inflation is looking like it is now tending towards being exceptionally sticky. And the fact that it is looking exceptionally sticky, well, it has to go down towards 2%. If it's not going to go down to 2%, we're not going to get that cut. So keep an eye on the inflation data. The market has tended to price in rate cuts. If we're not going to get these rate cuts, the market's going to reprice. Okay, so that's of concern. Now, the fact of the matter is that we've got this higher trough on the real rate. Let's see how the US dollar is behaving after last week's big move up here on the real rate. So bear with me. I'm just going to start off with the US dollar weekly chart, and we'll work around that, perhaps do a top-down analysis. And the reason that we're starting off with the US dollar is the US dollar tends to be positively correlated to the real rate. And if the real rate is moving up, then perhaps the dollar is going to be supported as well. One thing to note is, just before we go through to the US dollar, is that we do have some red that has been priced in um, for this week, but I'm not convinced. Of course, I mean it's only the beginning of the week. I'm not convinced. Uh, this is going to be a big red bar down. Let's go through to the US dollar and just see what that is telling us. Okay, here's the US dollar. Where is the US dollar relative to the 30-week moving average? And it's now on the 30-week moving average. What direction is that 30-week moving average? The 30-week moving average is moving sideways. It's lateral. What about the RSI? The RSI is back to 50. So we're kind of at this nexus. We're at the crossroads, so to speak, of the US dollar. If it moves above the 30-week moving average, that's going to tell us something, isn't it? If it gets pushed back, if the 30-week moving average acts as resistance and pushes us down, that's going to tell us something. So we're kind of at this nexus, this fork in the road, so to speak. But you can see that last week we had that big movement up in the real rate where we had a blue candle for the US dollar. It wasn't really enough to take the US dollar above the previous week's high. So I think that the dollar market participants not quite as convinced as the bond market participants. See, the bond markets really took us up to the point that we could put in this higher trough. See, we've got the reference candle there for the real rate. Just going back to the US dollar, we don't quite have enough meat on this to draw in the higher trough. But what we can do is we can go like this. We can go trough. We can go peak. And what we can do is, we don't have the higher trough here. We can put in higher trough question mark. And it's really going to depend if we get above that 30-week exponential moving average, and that exponential moving average turns up, then we probably get the reference candle, we get the higher trough. Let's just see where we are on the daily chart for the US dollar. And I think that it's going to be in no man's land, which is not great for us as traders. Let's just see if that is indeed the case. Okay, here's the US dollar daily. We're in no man's land. We're in zone 2. So I'm tending to think that patience is needed at the moment. The reason that I think patience is needed at the moment is because we are in that neutral area. In other words, we don't really have a bias in terms of uptrend, downtrend. What I can say is has moved from zone 3 into zone 2, so there is an element of strength that has come in terms of the greenback, and that is made more obvious by the RSI. I'm just zooming in here. The RSI has popped above 50 on the daily. It's still kind of at 50. So we've got a neutral on the weekly for the US dollar, and we're just about neutral on the daily for the US dollar. So that's going to make forex trading, I think, quite difficult until we get some sort of evolved price action that's either going to put us into zone 1. Zone 1 would mean that we are moving away from the rate cut in June, or that there is data that's coming out that seems to be supporting the rate cut, then we probably move, the dollar probably moves back into zone 3. But at the moment, I'm quite cognizant of the fact that this June rate cut is becoming, it's still 58%, but that's reduced remarkably. Okay, so it's kind of moving to the point where we're perhaps going to start getting priced out. Again, this CPR was hot last week, PPR was hot last week, and PPR tends to be, we don't really focus on PPR, but in this case, my opinion is that we should focus on PPR because it's kind of the inflation on the producer side, but then it gets transferred to the consumer side. So in other words, it could be telegraphing what's going to happen in the next CPI reading. It's just all very uncomfortable. I hope you guys understand what I'm saying. If you don't, just type into the live chat and I'll try and make it more clear. But the fact of the matter is, things don't quite seem as smooth as the market was hoping. Okay, let's take a look now and just see what is happening, say, with euro. If US dollar is looking neutral, is that transferring through to euro? Going to start off at the weekly. I'm just going to bring up euro US dollar. Okay, here's the weekly euro US dollar. So you can see as the real rate came up last week, so the euro came down. Okay, that makes sense. We also saw that the dollar was appreciating, so it makes sense that the euro depreciated or sort of maybe devalued. One way to describe it over last week. Let's put in our peaks and troughs here. So what we can do is we can put in our reference trough over here. So we're putting T, right? Then we can put, our reference peak. My mistake there. Let me do that again. Yeah, so just make that a P, reference peak. And then if that's the reference peak, this would be the reference trough. Okay, and once we've got the references in, what we could do is we can put lower peak. We don't quite have the reference candle in, so we can put LP question mark. And is it moving towards that 30-week exponential moving average? Take a look at the RSI. The RSI has dipped down and is heading towards 50. So we've seen the US dollar curve up, head towards 50, euro curve down, heading towards 50. Let's take a look and see what it looks like on the daily chart. Okay, here we go. What do we have here? So you can see that it's fallen into zone 2. So just as the dollar has pushed up into zone 2, euro has pushed down into zone 2. Zone 2, the neutral area. And what we can say is that there is a relative weakness, isn't there? It's moved from zone 1, which is the zone of strength. So it's moved from strength to neutrality. Well, that's a step down, and that, of course, softer euro. We are again pretty close to the 50 here. So I think we've got the currency markets in this sort of neutral position, and the neutral position, I think, is going to make it quite tough to actually trade out the currencies. Let's take a look at one more. Let's take a look at cable, just to see how cable is looking. then we'll do gold, then we'll go on to the stock markets. So let's just go through to cable. And we're starting off with the weekly chart here. This is not quite as weak as Euro. This is actually out of all the charts we're looking at. This one does look as if it's got a solid uptrend to it. So let's just put in our peaks and troughs. Let's put in our trough there. That's the reference trough. Okay. Let's put in our reference peak there. There is a higher trough here. And there is a higher peak. So on the weekly, it does look as if cable is appreciating upwards. It's revaluing upwards. But you do have this red candle last week, which is in line, so we've got this red candle, okay, which is coming down, which is in line with the real rate moving up. It's in line with the US dollar moving up. It's in line with the euro coming down. And you can see that the RSI here has actually hooked. It's heading towards 50. Let's just take a look and see what cable is looking like on the daily chart. If the weekly has perhaps got a higher sort of probability trend to it, what does the daily suggest? Just bringing up a GBP USD daily chart here. Yeah, okay, just sharing this tab with you. We're getting a similar story here. RSI is tending towards 50, so there's kind of an element of neutrality. And it's moved from zone 1 to zone 2. So it's moved into no man's land with some sort of weakness down. So Kim's asking, do we stay away from forex trading, euro, pound, US dollar? I think that, so from our point of view, from our methodology, it does look as if we've lost direction. Okay, so based on the methodology that you're using and your trading plan, you know, I guess try get some sort of leads off of that. But from our point of view, it just seems to me that we have lost direction. And if we've lost direction, do we go long? Do we go short? Well, we're in the neutral area. It does seem that there is a relative strength to the US dollar and a relative weakness to the euro and the pound. Okay, so off of those cues, maybe that's telling us something. But from just out and out trend trading, it seems to me that we've lost the trend. So from our point of view, I would just exercise some patience at the moment, because we've lost trend. Pound dollar. Why not use the previous big candles from November in December? So Anna, if I'm reading you correctly, and it's saying, why not use the previous big candles, November, December? November, December. Which candles? This is the weekly chart. Are you perhaps referring to the daily? Is the pound just on a weekly chart? October, November, December. So I'm not quite. We've got 1, 2, 2, 3, 1, 2. Okay, so I'm not quite seeing what you're pointing at. If you can be a little bit more specific. Here's December. Here's November. All right. I'm going to go to. I'm not quite sure what you're seeing there. Perhaps if you can email me, Anna, with just maybe a sort of a highlight or something, then I can address it tomorrow. I'm not quite seeing it. Or just don't trade. I just think maybe so. Baba Free. I think we're kind of losing our. I think we've lost the trend. That's what I'm worrying about on the forex side of things. Let's just go ahead and take a look at gold. Then we'll look at the stock markets. Going to go through to the weekly. Okay, let's just go through to weekly. Gold, XAU USD, right? Now remember, we saw a pickup in the dollar last week. Expect to see some sort of weakness in the gold chart. Very strange. We've actually got a huge pickup here in gold. So what's a possible explanation? What's a possible explanation for that? What I think may be happening here with gold is that I think that the real rate is picking up. I think that the potential for the June rate cut is getting slowly getting pushed out of the market. There may be some movement towards gold, okay, as a store of wealth. In that, if we get the June rate cut pushed back, and if the stock markets reprice, there may be a thinking that the yellow metal or the precious metal is going to keep some of its value. It's quite odd that we've been having such a strong gold price with hardly some sort of retracement last week. This is last week. Okay. All right. So Kim's saying China is buying. Okay. So maybe the central banks here are stockpiling up. All right. Let's take a look at the daily chart here. Okay. This seems to be more positive than the other charts in that it's retaining zone 1. Okay, so it looks as if we've got the 1, 2, 2, 3, and now we can see, is there going to be a 1, 2 here, another 1, 2, another impulse move? In other words, is there a potential dip in the uptrend? What we're looking for is this dip in the uptrend. So what we're going to do here for gold, okay, what we're going to go for gold, sorry, I'm just sharing it now. 1, 2, 2, 3, and then we've asking the questions, is there going to be another 1, 2? So we're going to keep digging in to see if there is some sort of chart. So we've got the idea here, okay, is that we've remaining in our bullish area, zone 1. We've got an expansion of volatility as we stay in zone 1. Let's go down to the hourly chart here and just see if we have a potential signal on the hourly chart. So let's go ahead and bring that in. So whilst the currencies are looking neutral, the precious metal is looking more positive, isn't it? Okay, let's bring it in. Here's the hourly for gold. So 1, 2, I'm just going to show you on a broad macro basis. 1, 2, 2, 3. And now the question is, are we going to move into this 1, 2 here? Let's just get rid of those drawings. And what you can see is we've got a dual trigger system, We've got trigger 1 that still needs to be pulled. We want to see a cross of the EMAs, the green 5-hour to cross above the orange 10-hour. We've already got a cross in the stochastic. So that's the 2 triggers. Now, are we going to get a swing? Well, that the stochastic is going to tell us. How's the stochastic going to tell us? It's got to get into the upper quintile. So if we get into the upper quintile, so I'll just show you, as we move towards the upper quintile, okay, let's just put in the border here. So you can see as we move into the sort of an upper quintile, that's where the magic happens. That's where the swing is, right? So now what we're looking for is we're looking for the swing. So there has to be a bullish cross in the EMAs. We've already got the bullish cross, the stochastic, and if we move into the upper quintile and hold, then we've potentially got the swing here. Okay, just going to make that a red. Okay, let's take a look at some of the stock markets. We've got here Hitchcock's. Okay, so Graham saying there's geopolitical uncertainty. So clearly there's the Middle East crisis. What's happened over the weekend is that Putin came in with a 90% votes going his way. Of course, he's eliminated all competition, right? And then he came out with quite a fiery speech afterwards. So perhaps that pushing some capital towards the precious metal as well. But what we want to see is the 2 triggers. The 2 triggers in of themselves is just the beginning signals. Then the momentum's got to carry us. Okay, so gold, I think, very much still alive on the watch list. Still very much alive on the watch list. Let's just take a look, see what's happening on the DAX as we're now 8 minutes over, 8 minutes after the cash open. Let's just go through to DAX. We'll do a top-down analysis. We'll take a look at the weekly chart first. So I'm going to bring that up for you guys. Good looking chart. Let's put in our peaks and troughs here. So we've got trough. Okay. Here is our peak. Okay. So once we've got the references in, you can see here is the higher trough. Right by the arrow, right by our reference candle reversal, and then we've moved into an uptrend as soon as we've taken out the previous peak, and we've got the higher trough, higher peak. So we've got the uptrend on the weekly. So there is a primary uptrend on DAX. Of course, we have an overbought condition as well. Now, a weekly overbought condition is much more difficult to read than a daily overbought condition, because it's going to take weeks, as we say, as opposed to days to sort out. It takes weeks to sort itself out, to renormalize, and to come back down under 80. Just be careful that the DAX looks as if it is overbought, because there is a higher trough followed by a higher peak, once the RSI starts normalizing, I think what we can do is we can look for the next higher trough. And again, once we've got the next higher trough, we can see if there's a dip in the uptrend here, right? Let's just take a look at DAX on the daily chart. Okay, just bringing up DAX here. Again, it's looking really. What we have actually is a series of reference candles. So here is reference candle 1. Okay, the way a reference candle basically works is you've got the lowest low in at least 3 candles, and then the candle to the right of the reference candle closes above the reference candle's high. Well, here's a second one. So the DAX is really on fire at the moment. It's doing really well. What's the issue? We overbought. So I'm getting a little bit nervous with the stock markets in that the risk markets, basically the risk markets have, they're always forward looking. Okay, they don't look behind. Whatever's happened in the past is not being priced into the market anymore. It's what's been priced into the market is effectively very much what we call the time value of money. So the time value of money is the future. Present value. Present value is future value divided by 1 plus R, which we call the required rate of return, which includes interest rates. So that's the formula. So what's happening, I don't want to get into the mathematics, but we know that June is the anticipated first cut. Okay, well that's priced in over here on global risk markets on the R. Okay, well if that R starts being repriced, then the present value gets repriced. And the fact of the matter is, because we are overbought over here, and the fact that we've got sticky inflation, hot CPR, hot PPR. PPR we often kind of neglect, but now I think in this particular circumstance, it's kind of the pipeline. It's pipeline inflation it's going to be passed along to the consumers. Unless the interest rate environment can get that inflation under control, I think that the overbought condition might kind of work its way through the system, and we kind of get a push down here. Again, because we've got the higher trough, higher peak, I would be looking to see if there is some sort of dip in the uptrend, like gold. We're trying to take advantage of gold, right? But the idea here is that the overbought conditions here, given the fact that interest rate environment's becoming more uncertain, I think you guys must just sort of keep your wits about you and understand that the market may reprice around that. Okay, that's as far as we're going to go this morning, just cognizant of time. If there are any questions, please go ahead and type those in. If you found this useful, I would ask you just to click on that rocket ship, that boost button, and help disseminate the live stream. Otherwise, I don't see any other comments. And I'll just quickly go back to the weekly chart here just to see if I can see what you were seeing. Otherwise, if you can just email me, I would take a look at what you're saying. But you've said 11th and 2nd. So here's the 11th. Okay, I see what you're saying. Basically, you're saying, let's just put the peak here, the higher trough there. I think this is what you're saying. And yes, the idea, you're quite right. You're quite right. My answer to you is just in the spirit of the trend. I think that in the terms of the spirit of the trend, we can kind of just move it like this. You're quite right. If you wanted to be completely strict, you are 100% correct. But I think that this sort of trough peak, higher trough, higher peak does kind of speak to the trend. Okay, let's wrap up here, guys. Thank you very much for joining me today, and we'll do it all again tomorrow morning. Thank you very much.